very quickly. These are some of the major world currencies and their acronyms, right? The Australian dollar, the Canadian dollar, the Swiss franc, the euro dollar, the British pound, the Japanese yen, the New Zealand dollar, and of course the USD, the United States dollar. These are the major ones out of the 80 currencies. Our top 3 currency pairs. It's the euro dollar pair, the euro priced in US dollars. There's the US dollar, the dollar yen pair, that's US dollars priced in Japanese yen. And then there's the pound franc, Swiss franc pair. That's the British pound priced in Swiss francs. These are the 3 most popular trading pairs amongst my Forex traders right now. Now let's talk about time frames. Let's get down to some nitty gritty. My 3 favorite time frames to take advantage of opportunities in this market. We'll go look at some charts and look at some strategies that you can use to take advantage in these time frames on these Forex trading pairs. Let's go. 3 time frames, my 3 best time frames. Daily, I would use the daily more for what I would call core trading. That's longer term trading, longer term positions. Then the 4-hour chart. Now the 4-hour chart, guys, is my favorite time frame for swing and position trading. Now what exactly do I mean by swing and position? Swing trading is more like several days. So 2 to 5 days on average would be a swing trade. That's big money in that time frame. And then position trading is several weeks. So swing trading is days, position trading is weeks, several weeks. So it's a little bit more extended beyond swing trading. And those 2 styles I like the best for the 4-hour time frame with the Forex market. It's different in the equity market. Swing trading and position trading would be a different time in the equity markets, but in the Forex market, the 4-hour chart is my favorite for swing and position trading. It trades a bit differently. And the hourly is what I would use for what I would call Forex scalping. That would be your short-term, multiple-hour pop plays. Prefer trading in these time frames. If you want it to go smaller, you drop down to the 15-minute time frame. Let's take a look at some charts here. So what we're looking at, guys, is a 4-hour chart of the euro dollar pair. So that's very important to understand. Every bar represents 4 hours of trading. What I want you to quickly notice is that I have my same 2 major moving averages on this 4-hour chart. I've got the 20-period moving average, which is the blue line. That is averaging 24-hour bars in blocks of 20. And this is the 200-period moving average, averaging the last 200 4-hour bars. All right, these are staple moving averages. And the same concepts I've taught you with the equity market apply to every market, including Forex. When your 2 moving averages are relatively close together and they're both relatively flat, you've got a flat, narrow state. Okay, so here would be your 20-period moving average. I'm drawing this. Here would be your 20-period moving average. And here would be your 200-period moving average. And what I'm drawing, the scenario I'm drawing for you is they're both relatively close. They do not have to be touching. There can be space between them, just not a lot of space. And if they are relatively flat, now they can have a little slant to them. I'm not talking about being perfect here. I'm just talking about they're not like this or like that. Relatively flat, that is your most ideal state. Why? Because your best fluid flowing trades are going to come from a tight, narrow state. We don't have to even know which direction. We just have to wait for the explosion out of it to the upside or out of it to the downside. If you go to the left-hand side of this chart, on the 4-hour chart of the euro-dollar pair, you see the narrow state. You see that the 20 is relatively flat here. Relatively narrow state. Markets vacillate from a narrow state to a wide state, back to a narrow state. Narrow state to a wide state, back to a narrow state. That's all they do over and over and over again. Narrow state to a wide state, back to a narrow state. Now I want you to take a look at this. Narrow state, wide state, back to a narrow state. Narrow state, wide state. What's next? Back to a narrow state. Is that clear? Do you see that? Narrow to wide, back to narrow. It can happen on the downside or the upside. Did you see that? Narrow to wide, back to narrow. Does that make sense? So look at how we came out of the narrow state here. Boom, right there. That is a beautiful thing. That's your bar. That's your entry. Your second best trades are going to come off of something after they're out of the narrow state. So what do I mean by off of something? So off of the 20-period moving average, or off of the 200-period moving average, off of something. So the best trades come out of a narrow state. Once you're out of the narrow state, there are still additional trades. But those best trades are off of something, off of the 20, off of the 200, sometimes off of a prior high, off of a prior low. Let's keep that in mind as we look at these examples here. Here's coming out of the narrow state. Boom! The trades off of something are like this. Look at this. Boom! That what I call elephant bar is off of the 20-period moving average. Then there's a color change. What's a color change? A color change play is simply when, if you're going short, when red overtakes a green, like that. That's a color change play. Boom! What's your color change play right here? That color change is off of the 200. You see, this color change is off. I mean, not the 200, the 20. Off of the 20-period moving average. This elephant bar is off of the 20-period moving average. These are very powerful, simple but powerful plays. They ensure that your entries are entries of precision. They're also low risk entries, so you can pile up on the play. I teach my traders, you should not lose your event. So if you go into this bar coming off of the 20, you should not lose your event, so stop above the event. If you are playing this color change off of the 20, you should not lose your event, so your stop is above the color change. If you are playing this color change, you should not lose your event. Look at your stop. If you are playing this elephant bar off the 20, you should not lose the elephant bar. These are tight, stopped plays where you can now utilize your leverage appropriately. Low risk, high reward entries. We go back to narrow. Look at this. We go back to narrow and you come out of the narrow again. Boom! And start the process again. Now remember, off. Color change off the 20-period moving average. That's all I want you to focus on here. Coming out of narrow states. Boom. Playing off of something. Boom. 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 Narrow states. Coming out of narrow states. Boom. After you're out of it, playing off of something. Off the color change, off the 20-period moving average. You see how simple that is, but powerful. I didn't say it's easy, because these bars are not moving. So when the bars are moving, it's not as easy as on Saturday and nothing's moving. I understand that. But the concept is simple enough for almost anybody to do it well with practice. Powerful and low risk.